It's been quite a remarkable few weeks in precious metal markets, starting with gold powering through $2,000 to reach record high levels, closing in on $2,100, it seemed at one stage, in one of what appeared to be one of the most overcrowded trades we'd seen for quite some time. So it may not be entirely surprising to see what's evolved over the course of the last 48 hours. But we'll start with what has actually driven gold to these levels initially. The primary driver behind this has actually been the drop-off in the dollar, which in itself has been triggered by the decline in real yields. Now, real yields takes into account both the yields available on US Treasuries and inflation. So if inflation rises, that has a downward impact on real yields. And also, if Treasury yields decline, that's the return, of course, available on US debt, then that also has a negative impact on the real yield as well. And it's been the latter really that has driven the decline that we've seen in real yields. The yield on offer on many of the Treasury yield curve has been declining. So we've seen the real yield actually move into negative territory and continue to drop, particularly in the early to mid part of that yield curve. So that's had a negative effect on the US dollar, which has propelled gold and other precious metals higher. As I say, gold towards the back end of July and into August flew through that previous peak just shy of the $2,000 mark, and then marched on through $2,000 through technical major psychological resistance as if it wasn't even there. It really was propelling at quite a rapid rate. But as we can often see in these situations, once the trade starts to fall foul, once we see people start to head for the exits, the flurry for the exits can be quite significant, and that's exactly what we've seen. Initially, we saw the drop-off was quite excessive as US yields started to jump higher over the course of the last 48 hours. Once 2,000 fell as well, it seemed that that move was dramatically accelerated. This culminated yesterday in gold falling around 5%, silver falling a whopping 15% on the day. So really just showing and highlighting the head for the exits that we saw amongst all of those bulls who had ridden this wave higher, cutting their profit and waiting, it seems, for a better opportunity to re-enter the market. Now, I remain bullish on gold and silver and other precious metals in the medium to long-term future. I think the environment is still very bullish as far as low interest rates, high QE, and obviously the economy is concerned. I think this is a temporary blip. In terms of what caused the temporary spike in yields, a lot of it seems to have been attributed to the upcoming issuance of US government debt, a large amount of debt being issued. Also, the PPI reading yesterday being slightly better than expected triggered a little bit of an upward tick in the yields as well. And with CPI coming today, we could potentially see a repeat performance of this. So it's certainly one worth watching. We are seeing a bounce back in gold and silver prices today. But I think there is potentially more downside still to come in the very near term. So certainly one to keep an eye on during these volatile movements. And I think the final thing to consider here today is the fact that gold is now in uncharted territory, or has been in uncharted territory. So when you're looking for major areas of support and resistance, it does become that little bit more difficult. To the downside, the 1860 mark, where it did find some support, is the most obvious starting point. 1840 is potentially an area of interest, with this having been a minor area of resistance all those years ago when we were previously trading at these levels, and then 1820 and 1800 below, where we did run into a little bit of a test on the way up. But obviously to the upside, you're looking back at those major areas that we started to hit at earlier on this week and towards the latter part of last week as well. So not really too much to draw upon, but just keep an eye on those big round numbers. I think they're always going to be the key ones, whether it's 2100, 2200, and so on. And then obviously the big numbers to the downside are always interesting. Gold does have a tendency to kind of move in these $20 clips as well. So that's another thing to keep a close eye on. But like I say, we are in uncharted territory, so that does make forecasting these support and resistance levels that much harder.